Good morning, Warriors. How's everyone doing? Ann, Richard, happy NFP Day. Okay. Nothing wrong with celebrating everything, I guess. Michael Weissman, Brand, Paul, we got a full house. Michael Bergman, Ingmar, AJ.
What are we celebrating, Coach?
NFP.
Yeah.
Yeah. You know, some people.
Not for put. Oh, I almost said
Yep.
it. What?
Oh, it's not for people. I just can't say it.
You're trying. Okay.
Get it? NFP.
This
what does
boy,
it stand for?
This boy.
No frickin' problem.
No,
Yes.
It's not for pansies.
Oh, I know what you're saying. Okay.
Can't say that anymore.
It's pansy. What's wrong with saying pansy?
Pansy's
Can't say
okay.
pansy?
Go there. You know
Anyway,
what, Dale?
Pansies.
I've got to
anyway,
say
yeah.
we've got some
Go ahead.
dedication. We've got some dedicated people here. Anne, who's on F.A.C.E today, she's in Australia. It's like middle of the night there now. It should be the weekend, and here she is trading the NFP. That's dedication, mate.
That is
dedication.
That is indeed dedication. Yeah.
I think I remember when I was like that. Okay, anyway, we have pretty quiet FX board again. Jury's out on the dollar still. Is it going to hold? I still think we're going to flush. Big up day. So Apple's earnings saved the market again. Apple's going to open up at the highs, right around the highs. Had a good earnings report. I will say this, that it wasn't like the Microsoft earnings report, which, really ripped this, the face off of baseball. But let me just show you what Microsoft did to the people. So we had a breakdown day before earnings, and then this. I was thinking about it, that really all the red events that we say are big movers, NFP, central banks, everything, it's a big deal if we get a, 1% move or so in a lot of the things that we trade. But these earning reports are 10, 15, 20% movers overnight. So, I mean, if you like, black and red bets, they're huge moves. So
yeah,
anyway,
that is true, but huge dangers as well, right?
Yeah. It is. It's just like red events are. So, but the red events in equities have much larger magnitudes. I guess that's just the point that I'm making here. So gold, after that spike in Hong Kong, I just want to point this out to gold bulls. I'm not saying go out and short it. I won't tell you if I am or not, but on the daily, at that high up there, we did not confirm.
And just look at that's a channel resistance up there, Dale. It was a big deal.
You mean off this line?
Yeah, exactly. You just duplicate that, put it below, and you got a big channel, and you hit it, and it's right off the all-time highs. I mean, it's scary.
And look at silver, diverged at new highs and barely made new highs. You're
always finding things to be negative about these metals. Just let them run. That's what I say.
Okay, well, yeah,
He's
let
right.
him run. Huh?
He's right.
Well, we'll see. That's what makes the market.
No, Dale, kidding aside,
yeah.
I'm with you, meaning there is a danger for a pullback here, right? But if you're asking me if I believe, for example, that we're done with the upside in general, right? We've actually found like a top. I don't think so.
I think 1920 is.
You remember I've been saying since last year, I believe that this year is going to be the year for the metals. And so far it's unfolding to be so. And I think we're still at probably the beginning of it. I remind you that monetary policy has not yet done the big turn, right? There is speculation about it, but we haven't seen it yet.
I think the big flow into gold and everything else has been really driven by fears of banking problems more than
that
monetary
as well,
policy.
That as well.
The last
But,
run.
but
my point is, and that's why I come in every day. If I wanted to come in and just say in the long run it's going to be great, I check in once a month. But I don't want fresh money getting FOMO at 2036 gold when 1920 is possible, because they'll be gone, their career is over, and then gold will be 2,500 without them.
I agree, by the way, Dale.
I rest my case.
I agree as well.
I agree,
as well.
and technically the probabilities are for a pullback. I'm with you 100%.
Yeah, so it's like these guys that get 200,000 views. They're always bullish gold, and depending upon when they're appearing, they look right, and when they're not right, they're saying I'm still bullish gold. So and the same with stock market bears. Same thing. They're always bearish, and then when there's a big break, see, I told you so. What we try and do here is keep people in tune with levels, so that they don't end up just initiating a flyer with a high risk because of where a stop should properly be. So I just consider that kind of a mission I have, and that we have here in F.A.C.E. So
very true.
I agree.
Speech. Anything else? Ryan, you want to start off with the cable? Cable wants 127, I think, and still think the euro, even though it's heavy, wants 111.80 or so. Yen, due for a bounce, right? Look at what it's holding. Some moving averages here, but I don't think we're going to just bounce to new highs. I think now you look for a failing rally. So I'm back on your side of the fence, Ryan. You still believe
Don't get
that?
Splinters.
Huh?
Don't get splinters.
Don't hang that. What's that wire called? That people
Chicken
put.
wire.
Oh, chicken wire.
Chicken wire,
Yeah.
barbed wire.
Barbed wire. Yeah, don't put any around your fence.
Yeah.
So,
I think today's one of these days you've got to see where we are at the close. I think the close is going to be very important for a lot of pairs.
okay.
We had an ECB that's going to they conceded down to 25 pips, conceded to the doves a bit, but got the concession that they can carry on hiking. We didn't make a fresh high in euro, dollar, euro pairs. Crosses all have pretty much pulled back, some pretty steep pullbacks. The market might be smelling the pause coming from the ECB, the same as the Fed. We might have just entered a different bit of territory now regarding central banks, and the cut word is going to be prevailing. Cable, it's out doing its own thing. It's walking along, whistling, half drunk, as it often does, not giving a monkeys about anything. So don't ask me where that's going.
Yeah, we're going to have Jens Nordvik here about 5 or so minutes after the NFP, and he was talking about what's going on with Swiss and Euro Swiss, that it's smelling the peak in rates around the world. Do you concur with that?
Yeah, I don't think that's a crazy thing. I mean, we were talking about it today and yesterday. Where realistically can the ECB go to? Maybe another 2 or 3 hikes of 25 pips. That puts them between 4 and 4.5%. I doubt they're going as high as the Fed unless inflation is, really starts ramping up again. So, when you trade, the market trades, it's looking for the next thing, not the thing that's happening now. So 3 more hikes, it might say at most done and dusted. Right, well, when are the cuts going to start coming? And that's not bullish for the euro.
Maybe we're going to find out today. Maybe we'll finally get a report that'll give people hope that we're closer.
Well, as we said on the Flow Show again, we've been saying this month might be the month for the last 2 years. One day we'll be right, and then we can all go, "Yay! Look at us, we got it right." But until then, we keep playing the game.
It is a new paradigm. I think that we're in. Everyone wants to look. I reflect. I talk about the good old days. In the markets, the good old days is the Fed put, and you know, they may ride to the rescue. Maybe if they do ride to the rescue, it's not effective. There's this thing called pushing on a string, which is why QE started ending globally, because you weren't getting the bang for the buck for it anymore. It was diminishing the kind of economic impact that you were getting by doing it. So anyway, just something to keep in mind for people, praying for the pivot. Okay, man, into the weekend with the yen.
Hi.
Wild week, huh?
Yes, sir. It's been a wild week. Yeah, the yen is going to be very interesting. Whether it be the dollar yen or the crosses in yen, that's going to depend on how good or how bad the report is going to be for risk. If we get a mild miss, we are expecting 180K, anything 100 and above is probably going to be a mild miss. If we are below the 180, then I think risk could do relatively well still. But then it's going to be a tough trade for the dollar pairs, in my opinion, if it's a mild miss. If we get a big miss, then close your eyes and sell whatever ends with yen at the end of a pair, I guess. If we get a big miss, then I think cable is probably going to test 127. Cable is really,
yeah, I believe that.
As Ryan was saying, driving around half drunk, but there is some logic in this. If you look at what I said yesterday in the room after the data, I said this is a mild euro cross bearish report, and that's what unfolded. Now we have to look at stuff this afternoon because it likely will have an impact on risk. The further we go from the expected outcome, the bigger risk will move. So I know it's going to be a dollar mover, but that's going to depend on how big the miss or the beat and the details. But I'm actually more looking at trading crosses on the back of this report than trading dollars per se. I might trade dollars, of course. I'm a trader. I'm going to trade dollars likely. But and the other one is the Canadian, and there we again I'm going to look at this cross. The Euro CAD is on an interesting level. Yesterday I said this could probably be bearish for stuff like EuroCAD, for instance, because the oils were trying to stabilize, and which they are doing right now, and Euro NOKI been better for the NOKI as well, and this could have a big impact on what's happening in the Canadian crosses. If you look at Canada as well, we are 99.5. It's a decent level. So I'm really going to trade more risk than dollars, perhaps via the crosses. Yeah, the dollar CAD is at interesting levels there, but like in the middle of the interesting zone, right?
Yeah, right there, dead center on a pivot.
Yeah, you have to break below what is it, 134.50, 60 or so to start going more down, and then go for a test of your of those lows, which are around the moving average. And then the top side is probably what, 135.5 or so from here.
Could be.
But it could be, as we always say, it could be an interesting saloon door in the Canadian, because it tends to move on labor reports, and we can have the double whammy now.
Okay, I just want to point out one thing. Although we have a big recovery in S&Ps, and we could rally back to 41.25 or so, and still not negate what happened this week. I mean, we did clean out the bears and we cleaned out the bulls, but this is what's important to me, especially since it's Friday. Despite the recovery, it's still a very negative week. Despite Apple, it's a negative week. You count back 2 candles and it's 41.33. So unless there's just like, peace in Ukraine, I don't think that we're going to close over 41.33, and that'll be your first 2-week reversal all the way up from January, the first one. So
Did-
that's not a good looking candle in my opinion.
On this S&P, did we already have a daily close below 4070? A daily close?
No,
Did
we
already
haven't
have
had it.
one?
No, we've no.
I think
Was
that's your key then for today, no?
Okay.
Yeah, we did yesterday. We had a close below 4070.
Okay.
Oh, okay.
Because I'm still looking at that, and then it dumps below, but then it does crawl back above, right? So
I actually think it's the 40-50 level is going to be the make or break it now. That's a 38% retracement of this entire move up, just so you guys know. I'll show you here in a minute.
All right, why don't you grab them, Blake?
Okay. Hey, I'm glad you kind of went around. What I'd like to do today is I'd like to get a little update on how you guys really want to trade, specific levels on what you're trading today. But here's the S&P, just so you guys can all see. This is the 50 DMA. That's the orange, just daily moving average is the 50 DMA. Good trend following moving average for those of you that don't use it. I always keep the 200 and the 50 DMA on. I don't use them specifically to trade off of. But the 50 DMA can definitely find some support levels, especially in overnight sessions. Like if I'm in North America and I'm looking into Asia, I'm like, okay, Asia is going to push it. If we're close to it, they can push it towards the 50 DMA before you get a response. You get those types of responses like that. But you'll notice this is a 38% retracement this entire move. Now, the reason why that's a big deal, because if you're a trend trader, like if you're you think that the market's going higher, we're trending higher, we're going to get a retracement, like a 38% retracement. 38% retracements usually are shallow enough to get a continuation in that same direction. Once you start breaking the 38% retracement, that's when the trend in question becomes in question. So that's why this 38% retracement is going to be a big deal. And you can see it's been a big pivot all week. And I think closing above or below it by the end of the day is going to be important. Now, a couple things that I want to mention, and then I'd love to, go around the horn to get everybody's comments here, is we are really stepping into a dangerous time of the year. From a seasonality standpoint, it's, sell in May, go away. You guys all know that tried and true saying in the markets. But more importantly is we are facing a really big obstacle this year. We've got a heated political debate in the US regarding the debt ceiling. And I think that this is going to be a topic of conversation for the next several weeks moving forward. So I really would love to use this, the elephant in the room is, we've got 12 non-farm payrolls that we beat. Is this going to be are we going to be able to do it again? I sure as hell hope so. And the reason why I say that is because I'd love to see the dollar stretch its legs going into this. After this data, I'd love to see us, put in give us the ADP number, for crying out loud. I'd love to see a 300,000 or 290 print in jobs, just for the headline number, not looking at all the, the other, ancillary numbers behind it. I'd just like to see a nice, strong headline number, the dollar catch a bid. I'd love to see the dollar yen spike up towards 135, 136. And I'd love to sell it because I want to be selling dollar yens into this month with this debt ceiling debate. So I'm praying and hoping for a strong number. The thing that worries me the most is when you're looking at the data and you look at the jobs data and you go, okay, well, how many months in a row have we beat? Well, we beat 12, right? So
a lot of big run.
Yeah, I mean it's a big run, and so as a result, if we get a miss, which is increasingly likely as this cycle stretches on and we start to see economic data weaken, we're bound to get a number that comes in worse than expected soon. I just hope it's not today. I really, really hope we get a strong number today. Maybe allows, for those of you that are Euro bulls, maybe gives us an opportunity to buy the Euro at channel support you know, which would be down here around 109.50. You can see I even have alarms set up down here to buy it. You know, the cable would pull back from this, you know, channel problem with the cables. We get a little false breakout here. But I'd love to see a dip down to 125 again. You know, yeah, the Aussie, I mean, you know, you know, the Aussie is just, I think, a short, just generally speaking. But anyway, the dollar, you know, a strong number would put us, you know, back up towards the 102 level, which is going to be key resistance, I think. And the most important though is the dollar yen. And if you know, we completed this bull flag pattern, you guys already know that. That's why I actually deleted the flag there, because I didn't want it to obstruct the drawing here. But what I'd love to see is, you know, the dollar yen recover a little bit into this channel and then be able to sell, you know, some sort of rally, you know, whether it's to 135.50, which is the 50%, 136.15, which is the 618. I'd love to see a spike up there to sell into. I just don't know if we're going to get it today. So anyway, that's how I'm going to look to approach today's jobs report. I want to go around the horn and see what you guys are planning to do specifically, and we can look at the charts to kind of map it out for you. So Steve, are you, I know you don't like to trade jobs reports. So we'll start with you to put you under the.
I don't like to trade events in general.
Yeah, I know you don't like to trade events, but you know, gun to your head, what would you try to do? Put a gun to your head.
Oh, please don't put a gun in my head.
I know there's none in Athens. There's no worries there. So what are you going to do?
I don't know. I honestly don't know.
Okay. All right. Well, we'll think about that. Let's go to Stelios. Stelios, what are you thinking today? If you get a good number, bad number, what are you going to do today?
Well, two things. On a good number, so a high number, I'm looking at the S&P. So if we drop below 40.48, which is also, you know, the previous low, and also it's a 50 DMA. There's a little bit of confluence. It's a fib as well, I think, if I'm not mistaken.
It's a 38% retracement. Yeah. We were just talking about it. Yes.
So yes. So if we break below there, I think there will be follow through. So I would sell that. On the other hand, if it's a bad number, I'll be looking at the euro dollar. Anything above 110.95. I want to buy. So basically, I want to buy a breakout or a breakdown on those two.
So you're gonna buy some momentum or sell some momentum in either way. Okay, all right. You know, fair enough. I'm not a big fan of that today, not me personally, but this is what makes a market, right? I think that's a great setup, a great plan. Now let me ask you this: why the euro and why not the sterling? That's like a little stronger right now. Andrew Bailey would be pissed.
You mean buying cable instead of one of the two. The two. You're absolutely right, and I've been talking about cable for a while on here and on the morning edge and everything, and I think it's broken out from the channel, and it should theoretically be going further. So yeah, one of the two would do.
Okay, all right, fair enough. Ryan, what are your thoughts here? Strong, weak number. How are you going to position it? Let's walk through the charts really quick.
Yeah, well, main pair I'm going to be looking at is dollar yen. I'm still running shorts, so I may have a little sell at the extremities like you if we get a decent pop higher, just for a short-term play. Otherwise, if we get a big miss and we head down maybe towards that 133 area, I may look to just take a little bit off my shorts. The other pair is euro sterling, which outside of the US stuff and the NFP is getting down to some interesting levels. We've got some decent support down into that 87 handle, big prior support. So I'm looking at that for my core longs.
Awesome. Okay. And you know, one of the things I just euro sterling, and I haven't had my finger on the pulse here. B, I tried to trade like this breakout, and you know, it failed obviously multiple times. I'm like, you can see that just triple top up there, and then it failed. I haven't had my finger on the pulse with this pair as a result, because it failed, and I was like, screw it. I just don't have a good read on it. But that little false breakout of this triangle does scare me, you know, for like from a bullish perspective, the way that it failed there, you know. So this support was always, well, since then seemed pretty likely. So you think that this is going to hold then at 87?
Yeah, I think it's got as good a chance as any. You know, it's a really big, you know, fairly long-term level. It's marked the range between there and sort of 88, 60, 89s. So a level's a level until it's not. So why not?
Good. Wait, that's a good outlook. All right, K-Man. I know you were talking about the yen and some of the Canadian pairs. You know, since people have been funneling in, coming into this number, we've got a little bit more of an audience now. What are your thoughts here going into the last few minutes before the jobs?
Yeah. So if it's a bad miss, I think the everything which ends with yen is going to be sold. If it's a big beat, then I think you are going to see your 135.5, perhaps 136 even. But yeah, I'm going to be, as I said, quite interested on seeing what the combination of the US and Canadian labor report is. We've seen this EuroCAD already coming back quite a bit from the highs, and I'd like to perhaps do a bit of continuation on that if the report is mildly bullish risk, because we see the oils coming back a bit. And the other one, dollar Norway, I was short, but then I flipped into euro Norway not to have any dollars into the NFP. But I think dollar Norway, as long as you stay below 1075 now, it's likely oriented more to the downside. And there's a possibility to go and have a look at 1050. Why not 1040 if it's mildly but for that it needs to be a mild miss, because a big miss is not going to be good for risk, right? And then you
right. Yeah, that's exactly true. I think if you get a big enough miss, people are going to go, oh crap. And maybe one of our traders in the chat room, Michael, he's from Australia, and him and I were chatting last night. He's like, yeah, we're going to get the dollar smile theory. And in a situation like that, if it's too big of a miss and we go like tits up and a little risk off in the market, you know, you're going to get, the dollar's going to catch a bid. Yeah. Even on a bad
depends
number.
Against what?
Yeah, right. I agree with that. It probably against more commodities or anything.
If it's a big enough miss, I think the stuff like dollar yen is going to tank, and cable is probably trading 127.
Yeah. You know, real quick, I want to talk about the dollar Mexican peso, because I've been on the long side literally like one or two times this week, and every time it's failed. Can't get out of its own way. Yeah. I'm almost hoping that we go to your scenario, K-Man. You see a big miss, like let's say big miss equates to we create 20,000 jobs. One to create 150, 180,000 jobs, even 120 would be good. Let's say we don't create any jobs. And that's, in my book, it's a pretty big miss. Dollar Mexican peso might come down to this long-term support. Let me pull up a daily chart because it'll give you more of a point of view. Really big support down here, and then reverse. That's one that I think it could flush out all the stops of anybody who's long, and then I would look to reverse that. That's
yes, because you will probably have your second wave where all the mixed crosses are being sold. You know, I mean, MEX sold versus the other currencies. If you really get a big miss, and I reckon there's quite a few people in stuff like MEX, yen, Euro MEX, and things like that. If you really get a big miss, those crosses are going to get hammered, right?
Yeah, that's exactly right. Hey guys, I'm gonna pull up our charts. It looks like we got about 1 minute. So here's the 10-year yield is going to be on the right. We have the S&P right here in the middle. 15-minute charts. I'm going to put the dollar index right over here to the left, and I'm going to put it on a 15-minute chart as well. So we can actually see the instant reaction in the market. Or is there something else that we should be putting up here? I mean, I think yields are going to be important today. I know if I could put up a fourth chart and see the Canadian response, but I just kind of want to leave it bigger for the people at home. I'm going to pull down the data flash that comes with ForexAnalytix. So you'll see all the numbers flood in here as the numbers get released, just very similar to like a Bloomberg, news release system where you can actually see all the data coming out. Remember, it is included with ForexAnalytix with your subscription. But here's the 15-minute chart. Dollar, S&P, yields. Any last minute words, guys?
Even Mr. Magoo could see this.
There we go. All right, Mr.
Mr. Magoo.
Mr. Magoo. All right, guys, let's hear it. Let's see it,
Drum roll.
please.
Oh, 253.
253, yeah, 253, 253.
It's a big,
253 it
big
is.
beat.
Big number.
Wow, unemployment dropped 0.2 and participation rate went up. Actually, no,
Wow.
went up. No, it stayed the same. Sorry. So these are good numbers.
They are
Average
good
hourly
numbers.
earnings also.
Yields
Yeah,
are spiking.
4.4.
Dollars spiking.
Not
Wow.
good numbers for people hoping for a pivot.
Yep.
Nope.
Yeah.
So
what
here
a
goes
pivot.
the boat running the other way. Yields will be going up.
There's
Oil will be
my.
going up.
I'm going to sell some dollar yen up here.
The Canadian report is good, but the whole creation of jobs were part-timers. So pay a little attention to that. But it's a good one again. Unemployment rate dropped to 5%. Well, no, it stayed at 5% where it was expected 5.1. So it's a reasonably good report in Canada again.
All right, let's I'm sorry, let's take a look at the Canadian. I was just in the middle of trading. So let's go over to the dollar CAD. Oh, look at that. Did you say it was I'm sorry, I didn't. Can you say that one more time?
It's a mildly good report. The problem is that it's mostly part-time jobs created. So it may have less of an impact, I would say.
Interesting. So you got the spike up in the dollar CAD from the strong US data countered by mildly stronger Canadian news data. So the dollar CAD spiked up, back down again. And with crude recovering back above 70, maybe the dollar CAD actually plays a little bit to the downside here. So
Gold got hammered, silver got hammered. And I don't talk my book, guys.
No,
I'm not short.
Shit, I talk my book all the time.
That was
Short
meant
dollar
for
yen.
me.
There you go.
I know that wasn't you
me.
guys. I know, no, it was, someone, one of our attendees.
No, it was meant for me though. Because I said,
Okay.
let it run higher because they know I'm long. But anyway.
Oh, anyway,
No,
so what?
So you were right. You were right. Perfect.
So what's wrong with talking your book? You believe in it enough to be risking money on it.
Yeah.
So
man,
anyway,
I talk my book all the time. All the time.
I
You
haven't
talk about
written
my
one.
book, you need some
I
help.
haven't written one, so I can't talk about one.
I talk against Ryan's book almost daily.
Stella's the only author in the group
Joking.
here. You should talk your book. That's a good book.
All right. Hey,
Thanks,
yeah,
Coach.
Stella, you should talk your book. Hey, guys, I just want to say thanks for being here with us. I again, this you're seeing, by the way, stocks come down a little bit on the strong number, keeps the Fed, elevated for longer. With this dollar strength that you're seeing, just keep in mind we're going to be going into a very, very contentious next couple of weeks. So is this an opportunity to sell at higher levels in the dollar? I don't know if I want to own dollars going into the next few weeks, just to be quite honest, right? I mean,
nice grab, Blake, in the trade room.
Thanks, buddy. Thanks. Yeah, I sold some dollar. Yeah, if you guys want to see the ForexAnalytix chat room, you can see where we talk about what we're trading. And by the way, if you guys are in ForexAnalytix community, I'm going to put you on Jumbotron just in case you want to say hello. There's the general chat room. You can see here people all chatting it up and saying good morning. You can see Ryan posting his plan of action, K-Man posting his plan of action right there, me posting my plan of action. So you guys already had a nice heads up on what we were thinking.
Yeah, you guys had a nice week today.
Oh, wait, hold on. And Benedict says he's on Jumbotron. There you go. Jumbotron. Hey, Benedict. Woo! All right. Guys, gals, I want to wish you all a great weekend. I know you have Jens Norvig here. He's
not here yet.
Oh, he's not here yet? Well, let's talk. Let's talk a little bit. And by the way,
he said he would be here between 5:35, 5:40. So.
Oh, cool. Okay. This way it gives us a little bit of opportunity to talk about, the
your book.
Here. So yeah, let's talk our book some more. So, hey, let's get your thoughts, Steve, since you're talking here. What are your thoughts following the data? Any opinions here? What we should be doing?
I think clearly this is a dollar positive. And most likely, although it's a little bit harder to take that decision, equity negative data print, right?
Yeah.
Now the question is what kind of a follow through we're going to say to this? Is it going to be limited? Is it going to, define the trend for the next few days, including, the first days of the next week? We know that there is a wave of people, which is clearly also depicted from what the markets are pricing in having to do with rates, that believe that the Fed, and I'm among them, by the way, right, that the Fed is closer to the end and to the next pivot than anything else. But obviously data like that push against this, right? So it's a
We
push-pull
have Jens
dynamic
here now. Yeah. We have Jens
Okay.
Nordvik in
cool.
the house.
All right. Well, hey, so Steve, thank you for your thoughts. Let's continue them on the morning edge. You guys, we'll see you on
Absolutely.
the morning edge. For those of you that are ForexAnalytix traders, we'll see you in about 40 minutes. Have a great interview with Jens. He's great to have here. He's one of the best macro minds in the markets. So make sure you all stick around. I am gonna stick around because I want to hear what
The
he has
guy
to say
worked
about
for Dalio. I mean, you know, he didn't have to scour the internet to learn about the business, did you,
Ray
Jens?
Who. All right.
Yeah.
Dale,
Welcome,
have a great
Jens.
interview. Jens, thanks for being here. And everybody, thanks for listening in today. We'll catch you next week.
All right, Blake team. Thank you very much for laying it on the court again all week long. And have a great weekend, recharge, and we'll do it all again like Groundhog Day, right, Jens? So welcome back to F.A.C.E, Jens. How are you?
Thank you. Good. I just had a quick look at the payroll numbers, so that's why I thought
Right.
the 8:35 was better than 8:30 for me.
Okay. Yeah, you know, we multitask. We trade when we're broadcasting. But what was your take on it? Surprised by the strength?
No, so we have a model where we look at 40 labor market indicators, and that one had set 249 into this number. So I think from all the alternative data that we look at, this was very much in line with that. Obviously, the wages actually probably the most important, and I think the Fed is going to look very closely. Definitely, Powell is looking very closely at the wages, right? So the fact that the momentum on wages were up is something that is going to make it hard for them to cut, right? So
yeah, maybe will he tighten one more time and throw the market off? Most people don't think there's another hike.
No.
They're in fact they're praying for a pivot. The most they're going to do is pause.
Yeah.
Right, Jens?
So I think we're at a point in the cycle where analyzing the Fed is much more complicated than normal, right? Because in a normal environment, it's mostly about growth and inflation, right? And well, in the old days, it used to be only about growth because we had no inflation. So if you looked at growth, you essentially get the answer.
Right.
But at this point in time, I think we essentially have three things in addition to economics that you should focus on, right? So there's the normal tracking of data that the Fed does. Again, inflation, growth, and so forth. And the second thing that they obviously talking about and actually got the most attention in the press conference this week was, okay, they're trying to calibrate what the credit drag is going to be from the banking tension. But I think there's actually a third thing now, and that is that we have outright financial instability, right? So if the banking system is so unstable, right, that the regional banks can go down 15% in a couple of days, then that kind of has potential to dominate everything else. So that's the dimension that makes it hard for them to hike further, really hard to hike further. But on the other hand, like we have a situation where we have inflation that's still way above target. You can look at the wage numbers today, right? The wage numbers today are not consistent with 2% inflation, right? So even the momentum we have in the wages today are essentially suggesting that the Fed still has work to do, right? So they're stuck in a very tricky situation, and I think a pause for several months is by far the most likely.
Okay. And what's your research saying about what could be the effect and perhaps even the outcome of the debt ceiling debate, theatrical theatrical play. You know, everyone consensus is, like always, there'll be theatrics, but they'll get it done. Do you think there's a lot of complacency about that?
Yeah, like US politics are getting more and more, should we say, complicated?
Like everything is, right? For the Fed, politics, you
Yeah.
know, everyone wants to go back to the good old days, Jens, with a Fed put, and they're gone forever, or for at least for a few decades, don't you think?
Yeah, so everything has changed because we have inflation, right? So you've been doing this for a few years, right? I've also been doing it for a few years, maybe you're slightly ahead of me, but
Oh, what a nice compliment. Only slightly.
So I started doing it in 2000, roughly, right?
Yeah.
And so in my career, we really had no period with meaningful inflation except the last few years. Right. And this goes back to the first comment I made, right? It used to be the case that when you analyze central banks, the only thing you had to focus on was growth, right? Because if growth was a little bit soft, you knew there's going to be very easy signals from the central bank immediately, right? And this is just what's fundamentally different now. It's not so easy for the Fed or others to be super dovish when inflation is way above target, even if there's some of the growth indicators that turn, right? So this is to do with the put, right? The put is cannot be
even with the banking crisis. You know, if we had not had this banking crisis, Jens, do you think we'd be pivoting?
No, definitely not. So
okay.
So don't forget that in March, before Silicon Valley Bank cracked, the plan was to raise the dots substantially. So they abandoned that plan because the banking tension came. We've still delivered hikes in March and May, but they have abandoned the plan to move towards 6, which was the plan that was in place, never written down, but it was the plan before the March meeting, right? So they've already incorporated some effects from the banking tension. It had an impact, right? But just ignoring the inflation, outright cutting rates, right, is a tough decision. It's much easier to pause than
well, the 70s are only market analog that we could really point to, because there were, if it is, there'll be a pause, and then they're going to have to restart tightening again 3 times. Isn't that the 70s parallel? I mean, I traded when Volcker was Fed chairman.
Yeah.
So, you know, I remember people were even watching the last thing to fall from the pressure of 19% T-bill rates was corn.
Yeah.
Everyone was focused on corn because that was, you know, contributing the agricultural prices like they, you know, could again. Inflation, once corn broke, that was it. So that was the beginning of the bull market in bonds. But
yeah, and I think also this is something that's relevant in relation to what the thinking is within the Fed. Like, everybody has studied those periods. Everybody in central bank circles don't want to make the mistakes from that period. Like, even like if I it sounds like I'm kind of self-promoting here, but like if I look back to last year and think about, okay, what are one of the best calls, not me personally, but ex-ante data made, it was that the ECB was going to be aggressive, right? And that was really about saying we now have an inflation shock where the key people within the ECB are going to remember what the Bundesbank did in the 70s and the 80s. And remember, they were much more aggressive than the Fed early on, right? And they had much less inflation, and it was success. It's not that they had no inflation, but they had a smaller problem than many other places. And that memory has been a key part of the ECB wanting to be pretty aggressive and frankly surprising everybody. Like, who you're going to ask somebody like, you know, a year ago, is the ECB going to go to 3 and 4%? Almost everybody would have said no way. Right. But they become much more Bundesbank-like, and it's because of that institutional memory going back to the 70s and the 80s for sure.
Okay. You know, I want to ask you, and this was your bailiwick, was currencies, right? So have you ever, and has Exante picked up on it, had so much talk about de-dollarization and the end of the dollar that even people on Main Street are asking me about it, gents. Is it justified, or is it setting up what could be a pretty vicious bear market rally once we get some type of low here, maybe a little panic under par, and then turn it? What do you think? I know Ray Dalio's #1 trade, right? I forgot who told me about this yesterday. Is short the dollar. It's his layup trade. Do you think that we could? You think? And what trade is ever a layup?
Yeah, so I was just about to say that I've never seen such a trade, but there are some trades that have nice asymmetry to them, but it's never 100% asymmetric. So
big break from last fall, 14, big break, trying to put in a bottom, can't find COT is hugely bullish. Euro, I think that we're maybe coming close to ending this move in Euro.
So
maybe
on the de-dollarization, right? So clearly I get asked about it every day. So I would answer this way, right? So as I said a couple of minutes ago, like I started doing this in around 2000, and for me, I've been through 3 periods where there was a lot of talk about, some kind of dollar problem, some kind of reserve currency problem. The first period was in the period 2005, 6, 7, 8, right? When the dollar was going down in a, what should we call it? Fast. It was going down fast, right? Euros traded up to 160. And at that point in time, it was linked to, okay, the US has persistent current account deficit. They also have a tendency for twin deficits. Those are hard to finance and so forth. So it was sort of linked to typical current account analysis. That was the talk back then. We had some famous celebrities, right? That
they don't want to get paid.
They don't want to get paid in dollars anymore, even though obviously you can go and exchange the dollars after if you get paid in the wrong one. But anyway, so there was that. Then there was a period from 2009 to 2013 where we talked about QE infinity, right? We talked about the Fed is always expanding the balance sheet. We're always printing money, that kind of thing. But what happened after the first period, right? We had the global financial crisis and the dollar strengthened very substantially. And that kind of shocked people. Okay, how come the dollar can strengthen if most of the problems are US subprime, that kind of thing? But that's how a reserve currency actually behaves, right? And then obviously since 2013, we had, China kind of had their blow up. We've had the negative rates in the Eurozone, low global growth, right? And we've had a very epic global dollar run since 14 up until really call it October last year, right? A big one, right? So the dollar definitely did not die in 2007. It didn't die in 2013, right? So the question is whether this is something different this year. And there is something that's very different. And that is we have a very big economy, the Chinese economy, and it wants to create an alternative to the dollar. The European nations have never had that ambition. They've actually had the opposite, that they say, we do not want the euro to be like an international currency. We don't want other countries to peg to the euro and so forth. So China is different from the euro in that China has a goal of becoming a reserve currency and competing with the US. And it's not just China, right? We also can see
the BRICS. Yeah,
there's the BRICS. There's obviously some countries that are willing to...
How about Saudi Arabia? That would be very important, right?
Yeah, so there's Saudi Arabia. There is China, India, BRICS in general, right? Then there's a Russia dimension that is not the same, but they're kind of related to each other, right? Russia has its Western FX reserves frozen, right? So they are seeking alternatives. They are buying Chinese assets, right? So there's something going on there. There's an effort by big economies. Like if you add the size of those economies up, you talk about very big numbers, right? So there's an effort to do something. The problem is that just because these countries, China especially, have a goal, doesn't mean they're going to get to their goal, at least not quickly, right? So what we can see in the data that we track, can I share my screen?
Oh, of course, yeah.
So I think you need to permit me. Maybe you need to make me a call. I can now. Okay, that's exciting. Yeah. So I'm just going to pull up the normal site here, and we can look at a little bit of data together.
And we don't want to forget that it's Karl Marx's birthday as we celebrate the NFP. You don't want to forget that you're rolling out a new product that you want.
Yeah, we have a second company, so hopefully I can share two screens. I'll start with one. So now I'm on my own website. So if you go into China Flow Analytics on the China page, right? So we can look at what's going on with bond flows into China. You see these two charts here?
We do.
Yeah. So these are interesting charts to look at. They're not good charts for China because nobody's buying Chinese bonds, right? We had a period in 2000 when yields globally was zero. And then essentially in 2022, January, when yields started to rise globally, there was a shift, and we've had essentially selling since then, right? So this is a very important chart when you think about, okay, is China really gaining reserve currency status? In terms of what's going on in terms of bond inflows, there's no evidence of it at all.
Okay.
So that doesn't mean there's not other aspect of trade, equity flows, FDI, and so forth that could be more supportive, but typically the bond market is really at the core of creating a reserve currency status, and that piece is entirely missing. Like, it couldn't be any more clear. We have outright dramatic selling, right? So nobody.
Would the U.S. excuse me, Jens? Would the U.S. Chart look any different than this?
Yeah, the U.S. chart looks quite different. So the U.S. data is.
So there still are flows coming into bonds in the U.S. despite the worst bear market in 150 years.
Yeah. So whether it's central banks buying or whether it's private sector buying, European investors are still buying U.S. Treasury securities, to give one example, right? So we track that closely. Another data point, we have so much data on the platform, I'm not going to show all the time series that we look at, but foreign direct investment into China is another one, right? So in the COVID period, right, where everybody was sitting at home and wanted to get a new coffee machine or a lawnmower or whatever, right? China's production really boomed, and lots of multinationals tried to expand their production as fast as they can. So there was foreign direct investment, so i.e. not bonds, but people building factories and so forth. And that has also shifted down big gear, right? So there's lots of things that China want to do. They want to become the reserve currency. They want to be a competitor to China, to the United States. But China is not really able to attract bond flows. And then they also actually have this problem that people are worried about supply chains, right? And they don't want to have all their supply chains just so reliant on China. So it's really running into some serious difficulties, this plan that they have, right? So that's the counter argument, right? So really, when you talk about de-dollarization, right, you can come up with a lot of arguments on the US side where you say, okay, we do have a lot of debt. The banks look not so good, at least the regionals, right? And the politics look terrible. And then you mentioned the debt ceiling, right? So like debt ceiling in relation to reserve currency status is like literally like an own goal. Like how are you gonna like try to undermine your reserve currency? The best is like talking about some like, you know, random default every year, really for no reason, right? So that there's a lot of negative stuff you can say about the dollar, but the problem is, what's the alternative? Yeah. Right? What's the alternative?
Gold.
And it's very hard to find a fiat currency that looks attractive. So there's obviously some fiat currencies that have done very well. The Swiss franc has done very well on a multi-year basis. But even if you go to other countries that look like they have sound balance sheets, right? You look at Norwegian kroner, right? Is it trading well? Not exactly, right? So it's not so straightforward just to pick, you know, countries that have, you know, traditionally good fundamentals. And obviously some people will say gold and Bitcoin, and gold had a good run. Bitcoin has traded well in recent months, right? But depends a lot on what your starting point is, how good that
depends
looks.
If the sun is out or it's dark outside. You know, Jens, I want to talk about something. I don't know what your feelings are, but I think it's really being ignored, that as the biggest monetary story since Bretton Woods, and that's the CBDC. Do you have you know, what's your view on it? Are alarmists, you know, a lot of alarmists are saying that, you know, it could end up being a surveillance currency and credit scores and all of that. Do you think it's going to happen, or there'll be pushback? And what's your view on CBDC? It is a big story, isn't it?
Yeah. Like if you think about the possibilities, good and bad, that you have with proper digital currency, intelligent digital currency, I often get this people say, but we already have digital money.
Right.
So there's a little bit of like a gap in sort of understanding of like what we really mean when we talk about digital currency now is like an intelligent form of money, right? Where each unit can be monitored individually, right? Which is not the case with the type of digital payment system we have now. And so just to give an example, right? If we had another pandemic, right, where the governments thought it is very important that we stimulate the economy over the next 3 months, we can issue a type of digital money, right, that has to be spent within a certain amount of time, right? So policy flexibility in relation to this type of money is of a totally different dimension than we've had before, right? We used to talk about, you know, we're just going to solve problems by doing quantitative easing, right? And there you created some money that just went into some financial institution that didn't have to spend any of them. In the COVID shock, obviously, we transferred cash to households and so forth, and a decent amount was spent, but the wealthy people didn't have to spend it, right? So if we can actually say you have to spend this money, like you can really kind of micromanage the economy in a way we've never seen before. So has incredible opportunities. I think also in the last couple of weeks, in relation to the bank tension we have seen, and in relation to the incredible deposit volatility that we all know about, like, you know, $40 billion leaving one bank in a couple of hours.
They wouldn't have been able to.
It's just a different regime, right? So the ECB talked about that yesterday. Central bank digital currency is potentially part of a solution to this problem, right? If deposits become very volatile, perhaps having central bank money is one way to get around that deposit instability. It has a lot of opportunities, and then obviously there's the negative angles, right? So does everybody want to know? Have the government know what you do with all your funds? Do you want to have maybe some people don't even want to have, you know, their spouse know what they do with their money, right? So so there's certainly a privacy element to this that can be very scary. It obviously depends on what country you're in, right? I think we know some countries that will use that surveillance mechanism very aggressively. We know other countries where we're going to have very strict regulation as to what we can do with that type of information, right? So it's going to depend on the country what the side effects are.
Oh my God. So we have to trust governments.
Well, I have more than one passport at the moment, right? So some people are privileged to, they can maybe decide where they want to move. But
You're politically diversified, gents.
I am a little bit.
Doug Casey used to write about that you not only need financial diversification, you need political diversification.
But
Because if you get the markets right and you're in the wrong place, it won't matter.
The point is, right, that we're going to live in a world where governments in certain countries are going to have just much more power than they've ever had. And that comes from the existing ability to surveil AI and so forth.
Yes.
And the digital money will be sort of the icing on the cake in a way, where you can track, monitor, categorize all these transactions in a way that's never been possible before.
Okay. Is AI the hottest topic in FinTwit world right now?
Yeah, so if you allow me, I wouldn't mind showing you the new company where we use AI. So let me see if I can.
See, what a great segue. Thank you for setting it up.
Yeah. Let me just see here. I'm gonna stop sharing 1 second. I'm gonna switch because I'm gonna switch to a different company. So that's why I have to actually just maneuver things around, but I think it should work now. Share screen. All right, you see some red and green now?
Yeah. Yes, I do. Market reader.
So this is an example of how we can scan what's going on in the market using AI and technology. So today, I've just looked, okay, what is moving the most unusually in the market, right? And we scan the market and we can go and look at different stocks, right? What's going on with them. And what I wanted to illustrate is that, see where we want to start. I'm just moving my face around.
So the difference between this and, other market sites that don't use AI, how does AI give it an edge?
Yeah, so you can see these cards on your screen now, right? And I've just filtered so we're watching everything that's going on in terms of US listed securities in Market Reader, right? And what we can do with the technology is that we can generate a human readable summary, a couple of lines of text, one paragraph that literally explains why that asset is moving.
I see.
So this is different from having to look up the Bloomberg screen and scan all the news headlines.
What a time saver.
Yeah. So this is we have a lot of structural models where we really pinpoint what the explanation is. But what we're using the AI to is to give a human summary of it, right? Because we might have 20 model outputs, and then we use the AI to say, okay, just give me literally 3 lines of text that summarizes it. So I think this is going to be a new way of reading the market. I'll just show one more thing, right? So if I just wanted to say, okay, what's going on in financials, specifically going on in banks, right? So again, this is what it looks like today. It's happy days today relative to what it has been in the last couple of days.
Yes, green everywhere.
Yeah. So so what you're seeing here, like for example, if you zoom in on the first one here, Key Corp, right? Okay. The system has scanned all the news that could be related to Key Corp, and it has found that there was nothing. So it's telling you instead that it's up on sector strength. It has analyzed everything that's going on, not just with Key Corp, but what is going on with the whole market, and infers that the reason why Key Corp is moving is because there's a sectoral move to which it is correlated, right? So it's a different way to create intelligent news. And we have, just examples of this. Obviously, we can go in and get more detail, right? But the bottom line is that these insights that we have here don't. Another example here, it's a US Bank Corp again. It's just moving with the whole sector, and the system knows that. Whether it's like, do I have to look for anything that's company specific, or is it a correlated move to the entire market? So this is something that we have worked on very hard. And like, I will give another example, right? So I just zoomed in on the banks there, right? But another way you can use this technology is, if Delta Airlines reports something and it says something about demand for tickets, they can move United Airlines, right? So in a traditional way of scanning the market, you go and look at United and say, there's no news about United. But through the market reader system, we could do news by association. If United moves on Delta News and we have the statistical correlation correctly, we surface that by association. So there's a lot of the moves in the market that are of that nature, and they are missing from traditional news coverage. So I'll do some promoting here, right? So market reader is a technology that we've worked on for 18 months now. This is hard work. There's some pretty serious modeling going on. We have a lot of data, and we're going to launch it probably in a month's time, right? So I certainly recommend that people go in and sign up on the marketreader.com site. And then if you sign up there, you'll be amongst the first that we give access to this tool. And I think it's going to change how people absorb financial news, right? Because you know how it is. It's still so manual that you have to go, okay, what's going on with that? What's going on? This allows you to really get everything in one go. Like, it could just be, it could be used in so many different ways. Like, we're not finished. This product is not finished, right? But the technology is there. And now we just have to apply it in good ways. Like, so one thing we're working on literally this week is, okay, we want to create alerts, right? So if you have 20 things you're particularly interested in, like, you want to get alerted if those instruments are moving in an unusual way, right? So we can, because we can summarize what's going on in 3 lines of text, we can even get you on the phone. Like, okay, here's why you made 4% on Coinbase or whatever it is you did. I don't own any of that, obviously, but you can get very succinct alerts. And the key thing to making that a successful product is that it's free of garbage. Because that's the other thing. If you go and look for news on any kind of stock, if I pull up on my Bloomberg that costs $25,000, right, you get a list of news. You'll get like 30 items, and it's like filing this, filing that, could be totally irrelevant stuff. Like, you're pulling up Starbucks and it says,
and the market's already gotten away from you.
Yeah. So we have a way of filtering the news where we only zoom in on the stuff that is truly market moving. So it just saves an incredible amount of time, right? Because you don't have to do that human filtering. And if you save that time, you can look at so much more, right? And if you can look at more, you can be better informed than the other people. So that's the philosophy we have.
Well, it sounds really, time is more precious than money, because money comes and goes. Time is gone forever, right?
Yeah.
And
there's somebody asking for a link, so I'm gonna put it in here because this is what we're going for.
Well, I wish you much success. If it's like your other endeavors, I'm sure you're going to do quite well with it, Jens. Also talking about time, let's not let as much time pass between our conversations. And really appreciate you sharing your insights on what's happening, on the market scene right now. And best of luck. We're fans of yours, here at Forex Analytics.
I appreciate the support.
right.
Thank you so much. I put the link into the chat, so if there's somebody want to have a look at it there, they can. Thank you so much.
Okay, and they could always find you on Twitter at @JNordvig.
Yeah,
And you know, get a hold of it that way if the link isn't
Yeah.
working. And so
yeah, good point. I put
so
that in.
sign up and be part of Jen's beta test on
Okay.
Market Reader. Have a great weekend, buddy.
Thank you. Thank you. Bye-bye.
Jen's Nordvig, everybody. Don't just count your pips, count your blessings. See you guys next week. All right. Hope we've added value to your experience here. Good luck. See you Monday. Don't just count your pips, count your blessings. Adios. Oh, thank you. XX, back to you, Mandy. See you, Bhavana. George. My trading family, adios.